Hey, the HSA tax deduction just increased, meaning you can save more money right now on taxes by using this account. What's up, everybody? It's Sherman, the CPA, and today I am going to update you on some news regarding HSAs and walk you through how to use these accounts to pay less taxes. If you have never heard of an HSA before, all you really need to know is that it stands for Health Savings Account. Now, the intent of these accounts is to help you set money aside to pay for health-related expenses that you may incur in the future. But the tax benefits and the tax flexibility of these accounts are what I love the most about them. I personally use HSAs as a way to shelter some of my own income, and if you keep watching this video, you will learn how you can do the exact same thing. All right, so let's start off here by addressing the latest news regarding HSAs. So the IRS will increase the HSA deduction by $200 in 2023, which is 4 times more than the last increase of just $50. And that is just for individuals with self-only coverage. For individuals with family coverage, the IRS will increase the annual deduction by $450, which is more than 4 times of the last increase of $100. So in total, individuals with self-coverage will be able to contribute up to $3,850, and individuals with family coverage will be able to contribute up to $7,750. But here's the great thing about your HSA contributions. They are tax deductible. So the money you contribute to these accounts directly lowers the amount of income you report on your tax return. And since we know your tax is based on your income, we also know that these reductions in your taxable income will also reduce your taxes. To illustrate this, let's look at a very simple example. So let's say you and your spouse earn $150,000 per year, and you have a 25% effective tax rate. Well, in this case, you would owe $37,500 in taxes. But let's say you all contributed $7,750 to your HSA account. Well, this contribution would reduce your taxable income from $150,000 down to $142,250, meaning you would only pay tax on this lower amount of income. So if your tax rate remained the same at 25%, and now your taxable income is $142,250, then that would mean you would only owe $35,560 in taxes, which is about $2,000 less than the original scenario. So you just saved $2,000 in taxes by simply moving money from one account to your HSA account. But to be completely honest, this is just one of the reasons why I love using HSAs. There are several other reasons why I prefer deferring my money into HSAs opposed to other tax advantage accounts. So let's go ahead and talk about it. By the way, if you want my full framework to reduce your taxes, then consider joining my Tax Savers Club for less than the cost of cable at mycpacoach.com. So let's talk about the tax-free wealth your HSA can generate for you. So when you contribute money to your HSA, you can let the money sit there in cash, or you can use the money inside of your HSA to buy assets like stocks, bonds, real estate, and other alternative investments. And a lot of people choose to invest their HSA money because the money grows tax-free. So that means any interest earnings or other investment growth you receive from your deposits is tax-free. For example, let's say you invested $5,000 into your HSA and your money is worth $20,000 in 20 years. In this case, you would not owe any taxes on this increase in value. And if you consistently invested, let's say $5,000 every single year, just imagine how much tax-free wealth you would accumulate inside your health savings account. All right, now let's talk about the tax-free withdrawals that HSAs provide. So as long as you use your HSA for qualified health expenses, you are not taxed on the money you withdraw from your HSA. And there is a laundry list of qualified medical expenses you can use your HSA for, including chiropractic services, dental procedures, eye exams, eyeglasses, vaccinations, and so much more. You can even use your HSA for things like massages, weight loss programs, and other types of activities with a letter from your doctor. And this is something that I just learned while I was preparing for this video. You can even use your HSA for dependent care expenses. So like babysitting services, summer camps, and before and after school programs. So that means if you have children, the range of things you can use your HSA for increases even more. But if not, then the HSA can still provide you with significant tax savings, tax-free wealth, and tax-free health expenses if you use this account correctly. If you enjoyed this video and want to become a pro tax saver by using my step-by-step course, joining me for live Q&A sessions and monthly masterclasses, then click the link in my bio for a special discount on our program while we still have slots remaining. As always, thank you so much for watching, and I look forward to seeing you in the next episode.